This is our 6th video in our series on building and optimizing financial guidance as a public company. And today's topic is financial guidance, the right metrics. And again, the premise here is that guidance is the art of finance. There's nuance here. It's not as detailed as, say, an accounting equation or an accounting function. And guidance is really nothing more than a translation of detail, your operational finance, to the summary level, which is what capital markets want in order to make financial decisions. And so that brings us to this idea that golden metrics, or the golden metric, also drive this ability to control valuation through financial guidance. And we're going to start with the golden rule. The golden rule is do not miss financial expectations. And why is this so important? It's because they're set by the company. The company has all of the control of the financial expectations that are set. The executives at a public company have more information than those people who are in the capital markets, and therefore they have control over how to set those expectations with investors. And so what are key metrics? Key metrics, when you think about it, the golden metric is the driver or drivers of your price times quantity function. This is really all the capital markets constituency needs. They need these inputs in order to build a simple model and make a financial investment decision. Second and third and fourth are you need revenue and adjusted EBITDA at a minimum if you're going to give guidance. And then what are some key operational KPIs? This is sort of the basic minimum to help you preserve the valuation of your company when you give guidance. And so key metrics, key considerations. Less is always more. You're looking to give summaries in ranges. The more you give, the more likely you are to miss. So what are the right metrics? They need to be quantifiable and measurable. Again, revenue, adjusted EBITDA are very easy to find, and then some operational KPIs, but they need to fall into this quantifiable and measurable. And then the second piece, which is really important, is this idea of do the internal systems and processes work correctly? And do you have the proper data hygiene around those metrics that you want to give guidance to? If you don't, everything's going to fall apart. And so what are some of the pitfalls around key metrics? If you're too aggressive on how you describe these metrics, if you give too many metrics or inputs in your guidance, and then if you give data on hard to track data sets. For some companies, bookings is hard to give as a data set to the public investors. It's just something that's hard to track. And so you have to be mindful of these items when you set guidance, because if you can't track those data sets internally, you're going to miss expectations. And the more metrics you try to guide to, the higher likelihood of missing when it comes time to print the quarter. So what are the key learnings? While guidance drives valuation, so do key metrics. Key metrics comprise your guidance. And then secondly, less is always more. The more metrics you provide in your guidance, the more likely you are to miss, which will lead to a suboptimal outcome in the stock price. And then third, always preserve the optionality of guidance. Your goal here is to use that information and knowledge you have internally that Wall Street does not have to set the optimal financial expectations when you give guidance to public investors. Thanks for watching.